American banking space is kind of crazy compared to some other markets that I've worked in and that you would be familiar with, just in the sheer number of licensed institutions. So while most people are going to be familiar with the biggest players, the JP Morgan Chase and Bank of America, there are 5,000 licensed banks in the United States and another 5,000 credit unions, which are similar but like somewhat distinct set of entities. And historically, pre-internet, pre-mobile, banking was a local affair. The branch was the distribution point for people accessing financial services. Even before the rise of the internet, you did already see a decline in the number of chartered institutions as banks consolidated, right? And I mean that's where J.P. Morgan Chase and Bank of America, came from. Is this agglomeration of um, local bank franchises into sort of the mega banks? But then with the rise of internet banking, and more recently mobile, geography has really fallen away as an important criterion in selecting a bank. And so you have all of these institutions, many of which are quite small, that are looking for, how do we compete in the banking landscape of, 2022, 2030? And, the answer that many are coming to is what we're now referring to as banking as a service. I would reframe or add the context of, if you're sitting in the seat of that local community banker, you know, it becomes a new way of distributing the products that you have, right? A new way of sourcing deposits, a new way of writing loans, a new way of generating, fee or service income. And you know, you can think about it as uh, a service provider or a vendor relationship in either direction, right? You could think of this fintech is using a bank as a vendor because the bank holds the charter, or conversely, you could think of it as this bank is using a fintech as a digital front end, but at the end of the day, they hold the license, they hold the deposit insurance, they hold the relationship with the regulators.